pretty much ever since early last year, I've been open about the fact that I've been buying SPYI, or the NEOS S&P 500 High Income ETF, and that ETF's brother or sister, QQQI, the NEOS Nasdaq 100 High Income ETF, like crazy in my long-term portfolio, to the point to where I've spent almost $50,000 on SPYI alone and several $1,000s also on QQQI. Now, these ETFs both stuck out to me because they offered sort of what JEPI and JEPQ offered, in a way at least, but in my opinion seem to have a high income strategy that offers even more incentive, which is why I've been pretty obsessed with both these. Now, just as of recently, I sort of changed my mind when it comes to both these ETFs, and I am going to be doing something very different moving forward. So if you want to see what my strategy moving forward is going to be in 2025 when it comes to SPYI, which I currently have 851 shares of, and QQQI, which I currently have 255 shares of, well, then make sure to stick around, drop a like down below, and let's get right into it. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. Now, just so everyone's on the same page, the ETFs that we're talking about is SPYI, or the NEOS S&P 500 High Income ETF, and of course, QQQI, basically the Nasdaq version. Now, like I said during the intro, I like both these ETFs and have been buying them pretty consistently back in 2024 because of their strategy, which offers what I seem to think is almost the best high income strategy that I've came across in the higher income environment. And these are because of several reasons I want to talk about in a second. But because both these ETFs have now been trading for quite some time, I mean, they came out around a year ago, more or less. Over time, there is more and more data to go off of and to see how both these ETFs have performed within different market conditions. And although 1 year isn't necessarily all that much of a time frame, I mean, when it comes to a long-term investment, I'd rather see how things perform over a 5 or 10 year time frame. But still, over the first year more or less of both these funds trading, I really like what I see, so much to the point to where I changed my mind. Now, what I mean by that is that throughout 2025, I do think, as of right now at least, I am going to put my foot back in the gas and I am going to start buying even more shares of both SPYI, which is the S&P 500 version, and more QQQI, which I've already been adding more in my portfolio as of recent. Now, previously, I've said that I'm kind of done buying this one, SPYI, because I like to have a diversified mix of different higher income ETFs and, of course, stocks in my portfolio. And with almost $50,000 worth of this one in my portfolio, for my specific portfolio breakdown, that's becoming a little bit of a heavy position. Now, the NEOS Nasdaq version, on the other hand, I don't have as many shares of, so I have been pretty open about adding more shares of this one and getting more Nasdaq 100 exposure with the amazing strategy that it offers. But even with my 850 plus shares of SPYI, because of what this ETF offers and because how well it's done, at least so far since inception, I do once again think that I'm going to start buying a lot more of it in the upcoming weeks and months. Now, let me break down a little bit more why I'm changing my mind about these ETFs and why I do think that I'm going to be putting my foot back on the gas and spending a large amount of cash balance on a consistent basis on both these. Now, like I said, this is because of the strategies that both these ETFs use. The strategies are the same, more or less, besides the fact that one invests in the constituents of the S&P 500, and of course, you guessed it, one invests in the constituents of the Nasdaq 100. Now, a quick side note on that, if you want to have more indirect Nasdaq exposure, there's ETFs out there that of course can do that. And on the other side of things, if you want more S&P exposure, then of course follow ETFs to track that. Now, for me personally, I like to have a lot of S&P 500 exposure, especially through a high income strategy like this one. But because I personally do want to add more Nasdaq exposure to my portfolio, and this is not only because of the growth potential, but in this case, in the high income ETF, it offers a little bit more distribution rate, at least potentially, because there's a little bit more volatility and option premium. But to get back to the main point on why I'm changing my mind, other than the fact that these ETFs have done pretty well since inception, in my opinion, I really love the fact that both these ETFs use this strategy. Now, the strategy is to seek to distribute high monthly income generated from, in this case, the S&P 500 index, implementing a data-driven call option strategy. Now, number 2, it says actively managed by NEOS. The fund seeks to take advantage of tax loss harvesting opportunities in addition to utilizing SPX index options classified as Section 1256 contracts, which are subject to lower 60/40 tax rates. Now, lastly, this fund also says that at times it's going to both buy and sell SPX index options, which may provide upside capture in rising equity markets. Now, again, both these ETFs do the same thing, but the only difference is this one, of course, uses the Nasdaq, and this one offers exposure to the S&P 500. Now in my specific portfolio, this is my long-term portfolio right here, as you can see, I have an objective and a strategy that I track very closely, and that's to buy into dividend-paying stocks and ETFs that over time have the potential to grow at least a little bit if nothing else, but also offer a nice amount of income from day one. Now that doesn't mean that my strategy is the perfect strategy for every investor out there. Some investors like yourself might be much more focused on income generation and don't even care whatsoever about growth in your portfolio, or vice versa, maybe you don't care about income and want your portfolio to grow sky high. But for me personally, because I want to buy into names, different stocks and ETFs that offer income, but also offer some potential for upside, both QQQI, the NEOS Nasdaq 100 High Income ETF, and of course SPYI have offered exactly that over the last year almost perfectly. Now there's other ETFs out there that might offer some high income potential, but there's not many other ones that I know about that specifically offer S&P 500 exposure, offer around a 12% distribution rate, and offer this with a very tax-friendly strategy. And besides, I think another thing that a lot of us income-focused or somewhat income-focused investors are worried about is NAV erosion. And if we look at the last year or so, which is more or less how long both these ETFs have been trading for. And again, things can change, things can happen, but at least as of right now, SPYI is up around 6.5% as far as price return goes. And keep in mind, I bought a lot of my shares in the mid 40s or upper 40s, so I'm up nicely as far as that goes. Now, the NEOS Nasdaq version is also up around 6.5% in the max time frame. These ETFs have not grown like crazy as far as price return goes, but as far as performance goes, total return, both the ETFs have offered exactly what I'm looking for. Now, because I specifically said that in my portfolio, I want to buy into ETFs and stocks that have the potential to grow over time, but also offer a boatload of income from day one. Now, again, there are different ETFs out there that offer more income or less income and more growth or less growth, but I truly think that both SPYI and QQQI offer a perfect mix of both. Now, for one share of SPYI, for example, looking at 2024's payouts at least, you're looking at around 50 cents more or less on average every single month for every single share that you have. Now, this means that if you buy 2 shares, let's say, per week or per day, whatever the case might be, that's around an extra $1 of forward income you're looking at during the next distribution. Now, these distributions can definitely add up, especially if you get to the point to where you're buying 2 shares here, 10 shares there, 5 shares here, etc., etc. Now, lastly, looking at both SPYI and QQQI's performance, and this is since inception. Now, this is pretty cool to see that both these ETFs have been trading for more or less an entire year already. And again, I get it, that's not that much time. We haven't seen that much craziness in the market necessarily over the last year. But again, the more time these ETFs trade, the more data we have to go off of. Now, I also think it's important to note that with a $10,000 investment and dividends being reinvested, and this is since the last 0.99 years, and this is both into SPYI and QQQI, with SPYI, an investor would have had an annualized gain of around 18.5% or a total return of around 18.2%. Now, with the NEOS version, we're talking a 23% more or less total return and around a 23-24% annualized gain. So again, not only have both these ETFs paid a consistent amount of income to investors like myself over the last year or so now, but also have grown even slightly and done all this in a very tax efficient, low beta manner. So for those reasons specifically, I am planning, like I said, to add a lot more of both the NEOS Nasdaq 100 High Income ETF to my portfolio in 2025, and to also add a lot more of SPYI on top of that. So now that I share with you guys my new strategy moving forward with both these NEOS ETFs that I currently hold on to, but wasn't really planning on adding much more to my portfolio this year, I lastly, most importantly, want to hear from you guys down below. Do you personally own either the NEOS Nasdaq 100 High Income ETF or the S&P 500 version? And if so, what are your honest thoughts about it? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.